Hi guys, Nenad is speaking, and today we have price action trading school version 2. So our revised price action trading. Let me move the camera. So yeah, we are ready to begin. As always, I'm with you each Wednesday, and we do price action trading. So this is session number 5, and I hope that you will be enjoying it. David is here. Hi guys. This webinar is uploaded. It's being recorded and it will be uploaded on YouTube channel. For example, today we had excellent trades with our ECS Live Telegram channel. We had very good trades, especially the GBP dollar, and we made like 70 pips. It was a counter trend trade, and now I wish cheers to all traders that actually traded excellent price action today. Cheers, guys. And now we are ready to proceed with our webinar, our free education, price action trading school, best price action trading guys you can find. And yeah, let's start. So today, best trading session and market hours. So today you will hear about the best market sessions, trading hours, and you will learn which pairs to trade in which session. So slowly we are getting close to our practical trading. As soon as we finish with this theory craft, we will begin, of course, on price action trading school. We will begin with new chapter where you will find and learn about new trading methods, new trading, I can say systems. You will see something probably for the first time. So we go step by step. David is saying, cheers, Prost. Yeah, let's go. We are always hyped to learn something new, and we are always eager to learn from traders who really know what they're doing. And I need to say, guys, I'm very proud on my group, and we are really doing a great job on Telegram channel. Now you can always sign up and see how we're doing. So let's continue. Price action trading revised consists of 4 pillars. Main pillars: price action trading, risk management, trading psychology, and market analysis. All pillars should be unified in order for a trader to be profitable. Okay. Price is everything. So everything is in price action. But how do we trade price action? When do we trade it? It's not that simple. So we need to learn about market hours. It's a very important part of our trading. And these are major trading sessions, guys. So New York, London, Tokyo, and Sydney. Now we also have, of course, Wellington session during New Zealand and New Zealand time, and we have Frankfurt session that precedes London Open. Now those are not major sessions. Major sessions are New York, London, Tokyo. We can say Sydney, but Sydney is not that strong. So it boils down to New York, London, and Tokyo. New York session or London session overlaps with the New York session, while Tokyo session just goes after the New York session has finished. So usually, guys, London session starts very volatile. I mean, there is London Open. Some trades can be executed only during London Open, and then the trades might reverse or go in a predetermined trend. Usually, what precedes price action, what precedes London session is volatility during Asian session, but that volatility is often moved by equities. We will also talk about it a little bit later. That is called, guys, correlation. And there is always intermarket correlation between Forex market, between equities and commodities. So remember, guys, now these are major trading sessions, okay? Now, these are some of the data I have. Like Tokyo session is 6% of market share on daily Forex volume. London session is 34% market share, and New York is 16% market share. So you can see that here we have really a big chunk of market share of daily Forex volume. So the biggest session, London session, is usually the most tradable, and usually you will see a lot of trading opportunities during London session. But don't forget that when London session overlaps with New York, we also have good trading opportunities. So again, these are major sessions where you can make money. course, London Open is strictly for London Open trading, while Tokyo session is something different. It doesn't coincide very well with two sessions. So let's say that New York session and London session can be bullish for some pairs. For the same pairs in Tokyo session, there can be bearish price action. So you trade session by session, or you trade New York and London session overlap. So remember, guys, start with London, continue with New York, then stop. And if you want to trade Tokyo session, have in mind that it's different mindset, very correlated to Chinese markets, to equities. So you need to be very careful, okay? So London session and New York session are entities on their own, while Tokyo session is also its own entity for itself. Now, regarding market moves, of course, Fed has 88% of share. Central Bank, European Central Bank does 32%. Japanese Bank does 22%, and Bank of England does 11%. What does it tell us, guys? It tells us that the dollar is the king, followed by, of course, euro and safe haven such as GBP. Of course, there is also a GBP. So market moves in correlation. There is always correlation between these four major currencies. And these four major currencies shape the nature and the move and the movement of Forex market. So, for example, when I trade, I mostly trade, of course, dollar crosses, euro crosses, yen crosses, and GBP crosses. Very, very, I cannot say very often, but I just pay attention to other crosses such as euro CAD or let's say dollar CAD, but mostly those are trades that coincide with these four major currencies. We call it fiat currencies, okay, fiat currencies, F-I-A-T currencies. So dollar, euro, Japanese yen, and the GBP. Why do we trade with, wait guys, just this is important. Why do we trade other currencies? Because also other currencies can yield us profits during other sessions. For example, the Australian dollar New Zealand moves a lot during Wellington session and during Tokyo session. Then we also have Mexican peso that can also coincide and move good with dollar. And we trade it in, if you want to trade it, you trade it during New York session. Then we had Canada or Canadian dollar, and 4% of market is Canadian dollar, and it means that Canadian dollar can be also traded during New York session. And of course, we have Swiss National Bank with Swissy with 8% of share, and we trade it during the London session. So again, guys, most of our crosses, major crosses, euro, dollar, GBP, and yen can be traded in both New York and London session, while some crosses like the Australian dollar in New Zealand will move the best during Tokyo and Wellington session. So it's important that you know which pairs to trade and when. It's not like you have a setup on a single market and you trade that single market each time. You need to understand session trading. So making positions, doing positions during major market moves, or eventually trading against the trend during these minor sessions, such as, let's say, Wellington session or Frankfurt Open. Very often, Frankfurt will give you a fake, and it's called Frankie fake. Usually, when Frankfurt opens up, it gives you a fake, and then the price bounces in an opposite direction during London Open. For example, when I was a very active member on Forex Factory, I became very, very famous for my Frankie fake trades that I was giving during 2010, 2011 on euro dollar trade. I was making good signals with those Frankie fake trades. So usually during Frankfurt Open, price moves in an opposite direction to London Open. So you will also learn about it on our price action training school, where I will teach you also how to trade fake outs, not breakouts, but also fake outs. But of course, let's go step by step and let's continue with our market sessions. This is extremely important, guys. Remember, I don't know what you learned so far. I really don't care, because this is what it is. This is the truth in Forex trading. The first 3 hours of each major session are most profitable. Those are London, New York overlap, again, New York session and Tokyo session. Between these three first hours, last 5 minutes and first 5 minutes on the top of the hour are best movers. So remember, guys, first 3 hours of each major session. So let's say that London opens up at 9 a.m. So 9 a.m., 10 a.m., 11 a.m. Those are most profitable trading hours. First 5 minutes and the last 5 minutes on the top of the hour are usually the most volatile because there is a profit taking. Usually traders who trade on hourly candle using hourly stop losses and using only hourly candles, or let's say 4-hour candles at the top of the candle or the top of the hour, 1 hour or 4 hour, they will collect profits. And of course, it means that price will suddenly start to move. That is the big truth in Forex market. And I'm teaching you now, I'm telling you now, don't forget this. This is a very, very important rule. So the first 3 hours of each major session. Again, if London opens up at 9 a.m., so 9 a.m., 10 a.m., 11 a.m. If New York opens at 1 p.m., okay, so it's 1 p.m., 2 p.m., 3 p.m. Calculate your time in your time zone, but don't forget, the first 3 hours of each major session are the most profitable. Same goes for Tokyo session. Tokyo session, let's say it opens up at 2 a.m., so 2 a.m., 3 a.m., 4 a.m. And top of the hour, TOTH, TOTH, last 5 and first 5 minutes of each candle are most volatile usually, guys. Now, which pairs to trade? This is also very important. You don't trade each pair for each session. This is a summary, okay, of which pairs you might trade, okay? Now I will show you. So London, during London session, you can trade all pairs. But of course, place a special focus and have in mind that Euro, GBP, dollar are most volatile. So Euro, dollar, and GBP crosses. For volatility, guys, measurement, you use Atr Indicator. Okay, I will show you that in a minute. So London, it's all pairs. London and New York, it's also all pairs. Then Tokyo session, you focus on Australian dollar, New Zealand, and Japanese yen crosses. Try to watch the correlation table, okay? It's important. And now, guys, this is how it looks. Let me show you. So this is my template. I will move to my other template. And I will remove this indicator here. You will see, okay, guys, let me just remove this. We don't need this. Okay, we will move all of the indicators and leave one only. And now with here with objects list, just give me a few seconds, guys. Okay, I will slowly delete it all. Okay, just give me a few seconds and everything will be deleted from the chart except this ATR indicator. Guys, this is the ATR indicator and this is our proprietary ECS ATR. You measure the market volatility with this indicator. It's very, very important, guys. You see, we put 14 for major market move volatility measurement. When we have ATR 14, it says 106. It means that the last 14 days provided 106 pips from high to low of on the GBP dollar. On euro dollar, it's 73. On euro CAD, it's 103. On GBPN, 141. Guys, the higher the number, the bigger volatility in currency crosses. It's important for you to understand because you cannot say you want to take 20 pips on GBPN and 20 pips on Australian dollar. 20 pips on GBPN is just a small part of its ATR. You see, the ATR is 141. If you take only 20 pips during, let's say, a session like London session, It's not very, very good because you have much more potential for much more for many more pips. But if you take 20 pips on the Australian dollar, it's okay, guys, because the range on Australian dollar is 51. So if you take 20 pips, you took almost half of its ATR value. So this is important, guys. Not each pair has the same appetite for the risk, for the volatility. So you can compare. Robin is asking, you can compare ATRs. You can, because Australian dollar moves only 51 pips. It means that today high to low was only 51, guys. It's so narrow. The range is narrow. But watch, for example, GBPN. Okay, this is today's price action. Just watch daily candle. You see the daily candle here, guys. Here, the daily candle. It's funny, you see, only 35 pips. You see 35 here. Watch this, 35 pips only for today. And if you put a pound yen, watch the daily candle on pound yen, guys. 140, yeah, here it says 152. You see? Now, Robin and others, guys, this is the difference. GBPN moved 150 pips today, while the Australian dollar moved only 38 pips. So if you were short on or long, it doesn't matter, on GBPN, you could have made much more than trading the Australian dollar. You understand now my point? Each literally currency pair moves, okay, with its own volatility gauge range. The volatility range is the best represented with the ATR indicator. Remember that, guys. Okay, with the ATR indicator. Cheers. So many traders ask me, Nenad, how come that you are very precise with your entries and with your exits? This is because, guys, I always pay attention to major sessions, which session I'm trading, and thank you, David, and which pairs I trade. And I also pay very, very close attention to the ATR indicator, guys. It's extremely important to understand this because you will not hear from other traders about the ATR intraday movement. Guys, this is intraday. I'm talking about intraday trading. I'm not talking about swing trading where you hold your trades for a couple of days or for 2, 3, 4 days. I'm talking from intraday perspective, guys. Today's ATR on GBPN is 152. The average last 14 days is 141. Tomorrow, maybe it will be different, but that is why we have 14 days in our calculation. It's not wrong that you put also 7 days, but either you use 7 days or 14 days. That is what I do. I usually have 14 days, but from time to time I might use 7. It doesn't matter. It's not like it's a major difference, or it will mean that you will lose or make money if you put 7 or 14. It's just the best calculation, 7 or 14 days. Believe me, guys, I know what I'm talking about, and I literally am into this, and I've been into this for a long, long time. ATR is very, very important, especially, guys, for intraday traders. Okay, so let's move on with our presentation. Yeah, correlation table, guys. Some brokers offer, you have, if you go to our website here, you will see that we have, of course, the list of recommended brokers, guys. And those are brokers, of course, trusted brokers that we personally have reviewed. And here, if you take a look, you will see that, yeah, a lot of brokers there. You can, of course, choose. But here I'm using Trader, and there you will see correlation matrix. Okay, if you go like here, press OK, you will see the correlation between currency pairs. Guys, this is also very, very important. We will talk about correlation table in one of our next sessions. At this point, have in mind that the stronger the correlation, the bigger the number will be. So if you see a correlation between euro dollar and GBP dollar last 1 hour, 200 bars on 1 hour time frame, it is 96. It means that they are moving literally the same direction on 1 hour time frame. But if you see the negative correlation, such as, for example, with euro dollar, and I know that it's euro dollar and dollar Swissy. Let's see if I have it here. We can add it here. Okay. Okay, save. You see now, euro dollar and the dollar Swissy, okay, minus 83. It means that euro dollar and dollar Swissy are moving in the opposite ways. Okay, just for now. So watch these correlation tables. Today, for example, I had a long on the GBP dollar, and I saw that euro dollar was dropping. Okay, I saw also that GBP dollar didn't drop. Euro dollar was dropping, GBP dollar stayed. And I knew that it will gonna spike. I used my counter trend module and we made straight 70 pips. And you see now, guys, you see today's ATR was 1.2830 versus 96.91. So we literally hit a target. And then when we hit a target, the price, guys, rejected. That is why it's important that you trade GBP dollar during London and New York session. And if you want to trade the Australian dollar or New Zealand dollar, guys, trade it during Tokyo session. Yeah, Ali saying the trade was excellent. Yes, thank you, Ali. And I know that you enjoyed it. I also enjoyed it, really. It was so good and literally like 70 pips out of the blue. Like, I know it happened in a minute. Just a spike. Boom. Okay, but I was using the ATR, of course, and correlation. David is saying that he took 72 pips and he opened a beer because of that. Haha, that's nice, really. I like it. Yeah, I will take a screenshot of this. Yeah, okay. Yeah, very, very nice to see this, guys, and to hear from you. Okay, now, what is also important, guys? It's important, guys. Again, I'm talking about the first 3 hours of each major session. Liquidity is huge. Momentum can be overwhelming during the first 3 hours of each major sessions. That is when big players kick in and when big players take their profits. Lunchtime on major markets such as London usually serves to counter the trend. For example, today you saw that GBP dollar was going up towards 27.80, right? And then suddenly it dropped over 27.45. That is a time when I decided to go for a long trade because that was just after the London lunch. Guys, London lunch usually happens around 12 or 1 London time. And usually during that time, the price starts to go in counter trend direction. And pay attention to Forex options from 13:30 to 14:30 GMT. About Forex options, guys, you can read it on forexlive.com. Yeah, forexlive.com. That's important, guys, for you to understand. Forexlive.com. They usually write about Forex options because that can also create additional volatility during London New York overlap. Have in mind, London noon starts from 11 a.m. It can go to 12 p.m., 1 p.m. also. And usually that is the time when markets make counter trend move. Why does it happen? It happens because of profit taking. Remember, guys, when short trades are closed, platform immediately opens a buy position behind the curtain, we say. You don't see it, but every close of a short position is automatic buy into the market. And each close of a short position will make a U-turn and the price will start moving up. It's the same for buy position. Each close of a buy position will actually make the price go down, drop. And if major markets, if major players and big players or majority of Forex traders start to take their profit around the same time, you will see that price literally makes a counter trend move. Now, liquidity will drop during Asian session, but Tokyo session will be volatile. That is why we have two bell fronts, London and Asian session. London session usually is more volatile than Asian session. But have in mind that Asian session can turn the table, turn the trend of London session. So London and New York should be traded independently unless you make a 4-hour trade and you, let's say, want to carry over the trade, carry over make a carryover night trade. Then you can also count in Tokyo session, but for that you need to use 4-hour time frame. 1-hour charts are solely for intraday trading. That is how I use it, and usually I trade solely London or London New York overlap during as a major session on 1-hour time frame. And always, guys, watch for low liquidity during a market open at 12 a.m. Because 12 a.m. you will see that many brokers, majority of brokers, will have their spreads widened. Some spreads that are 1 or 2 pips will go to 5-6 pips, some even more, but that is contributed due to low liquidity, guys. Low liquidity during midnight, okay, 00, okay, midnight or 12 a.m. will widen your spreads. So if you are in a position and you want to carry it over the night, you need to add more to your stop loss because of spread widening that will happen during 12 a.m. Market open. Usually brokers will make it unavailable for you to place any positions during 5 minutes, okay, during the first 5 minutes of new trading day. But it's normal, guys, it's normal for any broker, at least where I trade, so it doesn't affect your trading. But have in mind that you should be widening your stop loss due to spread widening on market open during 12 a.m. Okay. Also, guys, that is important. During intraday trading and during each major session, there will be news and speeches. You need to pay attention. This will be a special part of our price action trading school called news trading. But now, if you want to listen to me, guys, do not place any positions with your standard templates, with your intraday templates during news and speeches. News trading is completely different dimension. With news trading, you solely focus on the news. You don't make any positional trades during conferences or pressers. It's also important to know that the price will make whipsaws if there is some big news coming in or some out of the blue event is happening. The price will make a zigzag on your chart, like up, down, up, down, up, down. It's called a shark tooth or a whipsaw. We traders call it a whipsaw, but I also call it a shark tooth. So you need to be very careful. You know, whipsaw. If you see that, stay away out of the market. You will just lose, guys. Believe me, you will just lose. Also, guys, if you carry your trades over the weekend, you need to pay for overnight charge. It's called swap. It's overnight charge rate. Some currency pairs have positive swaps. Some other currency pairs have negative swaps. So you also need to pay attention to swaps. Then market close. Market usually closes now around 10, 11 a.m. GMT. There will be a 5-minute break, and then markets will usually open with the bigger spreads. So always adjust your positions. Bank holidays are very important. You don't make big trades during bank holidays. And usually during bank holidays, liquidity is low. So some important support and resistance levels will be attacked because no one is defending them. There are no banks. And sometimes you will see some irrational moves during bank holidays. Also, during summer winter holidays, price might fluctuate in a range. Stress tests, when they happen, stay away from the market. It's called bank stress tests. And NFP Mondays can be also very, very nasty. I know personally that a lot of traders think that if NFP is good, dollar will go up. It's not always the case. There are a lot of factors. We'll talk about it, but have in mind that after the NFP Friday, there will be NFP Monday. So try to think about placing smaller trades. Okay. Again, this is very, very important, guys, to understand sessional to session trading and how market moves during some special events, as I'm explaining it here. Now, the correlation, guys, this is important also for new traders. If you trade Asian session, guys, focus on Australian dollar, yen, and New Zealand pairs. The Australian dollar yen has a very high correlation with equities such as ASX 200, its Australian equity market, DAX, and SP 500. ASX during Asian session, DAX during London session, SP 500 during US session. Big correlation between the Australian dollar, yen, and equities markets. Also, Canadian dollar and oil have a very big, they have a very, very big positive correlation, very high positive correlation. Australian dollar versus gold and copper, also positive correlation. And euro dollar versus dollar Swiss, okay, it's important, guys, to understand that they have negative correlation, okay? It's guys, very, very important to understand this correlation, okay? And again, it's important, guys, if you trade intraday or you do session trading. Each session has its own movement, guys, and you need to be well aware of that. Okay, what I was going to tell you now, guys, yeah, just a few things, and I will answer the question from David. Is it correlated to risk on and risk off? Basically, yes. When it's risk off environment, commodities prices tend to increase, and traders will usually go long Australian dollar due to that factor. When commodities prices go up, stock markets go up, and there is demand for positive swaps on Australian dollar pairs currently, as opposed to Japanese yen. When it's a risk-off environment, usually the opposite occurs, and as a end result, the Japanese yen appreciates as foreign flows, usually from Japan, are repatriated back to their local currency. So, guys, always watch for that. It's important that you understand risk on and risk off. Yen is going up when 100% is risk off sentiment, gold is going up, commodities price is going up, equities are going down, but yen strengthens as a result. So that is the answer to your question, David, about is it correlated to risk on and risk off. Or Ali was actually asking that. So, guys, remember, and let's conclude it. If you have any questions, you can ask me. During London session, focus on euro, GBP, okay, and dollar currency crosses. During London, New York overlap, you can also trade Canadian dollar, you can also trade Australian dollar, but also focus on euro, GBP, and dollar. And during Tokyo session, focus on yen. Yen can also be traded during each session, but also big focus is on yen during Asian session, Australian dollar, and New Zealand dollar. I don't tend to make any positions on New Zealand dollar now, even with the Australian dollar during London and New York, because it's such a slow mover during London and New York session. So, guys, if you have any questions, please ask me. The question, is there analysis after the video? No, this is just price action training school today, and our main subject is market hours and best sessions to trade. So there will no be the analysis today. So it's just a school, so you can understand the main principle behind session trading and which pairs you should trade during each session. It's very important. And next time we will cover other things. If you have any guys questions, feel free to ask. If not, I hope that you enjoyed. This webinar is being recorded. It will be uploaded to ECS YouTube channel, so you can watch it as long as you like, as many times as you wish. And I hope that you learned something from this webinar. And as I always say, let's go step by step. We are getting close to the end of theory craft, and with practical trading, we will start with practical trading such as candlesticks and so on. And I will teach you a lot of good stuff like Fibonacci retracement, internal retracement patterns, and so on. Let's go step by step. This is Price Action Training School. Nenad, AK Tarantula, NKT is with you, and I'm there to help you out. Cheers, guys. You will always learn new stuff, and the most important stuff from me. Don't worry, I'm there to help you out. Okay. Talk to you soon, guys. Cheers, and as always, trade safe.